Good morning. You're watching All You Need to Know on BloombergQuint Live, India's first digital live streaming business news service. I am Agam Akil. Let's start by taking a look at the headlines. The United States says it will not cut any further tariffs on China until the presidential election in November. This is in order to check China's compliance with the Phase 1 deal that will be signed later today. Wipro's third quarter earnings meet estimates. The company now guides for a 0 to 2% sequential growth in the fourth quarter. The Bombay High Court refuses to give interim relief to broadcasters on the TRAI order that reduced price of pay channels and also capped the number of pay channels in a bouquet. Oil prices fall to their lowest levels in a month as tensions in the Middle East are on the decline. And it is a subdued start to the trading day in Asia. Most markets are in the Asia Pacific are open, which have opened are between flat to negative. Well, that said, let's begin the U.S. markets with the U.S. markets first, where the benchmark indices had a mixed day of trade, and the Dow Jones, along with the S&P 500 and the Nasdaq, made an intraday record highs, cooled off post that. The Dow was the only index to end with marginal gains. Renita Young of Bloomberg News wraps up all of Tuesday's Wall Street action in this report.
Stocks dropped from record highs on Tuesday, and U.S. markets closed mixed, all as corporate earnings season kicked off with big banks and ahead of the U.S.-China trade deal Phase 1 signing. During the session, we saw U.S. inflation rise by less than forecasts. We also saw the Bloomberg Dollar Spot Index rising a little bit, and the U.S. dollar is up versus some of its major currency competitors. So no surprise that gold was down, since it was a little bit more of a risk on tone for much of the session. Meanwhile, the biggest declines earlier in the session happened within the tech and energy industries, and JP Morgan rose after its FICC sales beat analyst estimate. The same thing happened with Citi, and heading close to the end of the week, we'll have Morgan Stanley reporting on Thursday and Goldman Sachs reporting corporate earnings on Wednesday. Both banks were rising during the session to multi-year highs. That's a look at your Wall Street action on Tuesday. In New York, I'm Renita Young for Bloomberg News.
Well, moving on to cues from Asian markets, we have Rosalind Chin, who's joining us from the Bloomberg studios in Hong Kong. Rosalind, good morning. What are the updates?
Yes, we're seeing a lot of red on the boards, though looking a little bit more mixed across the entire region, but the MSCI Asia Pacific right now losing just under 1/5%. Of course, Japan among some of the biggest losers there. We're seeing the Nikkei 225 down by nearly 1/4%, but perhaps not unexpected, since we did see the Nikkei yesterday cross that 24,000 mark, so perhaps a little bit of selling pressure on today. But in the long term, we do have Ichiyoshi Asset Management, Mitsushige Aquino, saying downside, though, likely to be fairly limited. We do, of course, have that U.S.-China Phase 1 trade deal signing coming up in Washington on Wednesday, which is likely to perhaps give a little bit of a boost to investors. But, of course, the big question is what happens next, because everyone's been looking forward to this signing for such a long time. Perhaps we don't have a clear picture of what may happen next. We do know that those trade concerns still linger. Of course, we've had a report from Bloomberg saying that billions of dollars of tariffs on Chinese goods are likely not to be lifted. They'll stay in place until after the November presidential election in the U.S. And a Reuters report is saying that rules are being drafted that does allow the U.S. Commerce Department to block certain exports to Huawei under certain conditions. So those forming a little bit of a cloud over this U.S.-China trade deal signing that's coming up later today. Around the region, other than Japan, we are seeing the Kospi losing by just over 1/4%. Markets in China and Hong Kong pretty muted right now. Hang Seng Index flat, as is the Shanghai Composite. CSI 300 similar, not doing much at this point in the session. S&P ASX 200 making gains of about just over 0.35% at this moment in time. We had a few words out from the Prime Minister, Scott Morrison, on the bushfires that have been crippling some parts of Australia, saying the fire outlook does continue to look a little bit more benign as they've been getting some rain, and saying that they will spend as much as it takes to help fire victims. Of course, the central bank is closely looking at the impact of the bushfires on the economy, because it will, of course, have one of its first meetings in the coming weeks. Back to you.
Well, thanks so much for that, Rosalind. Of course, that is going to be important to watch out for. That is the impact of bushfires on the Australian economy. But, well, we stick with, the U.S. markets. And earlier in the day, Bloomberg had exclusively reported that the U.S. is reluctant to lift further tariffs on China and intends to check China's compliance with the Phase 1 deal that will be signed later on in the day. The news was then confirmed by Treasury Secretary Steven Mnuchin. Let's listen in.
These tariffs will stay in place until there's a Phase 2. If the president gets a Phase 2 quickly, he'll consider releasing tariffs as part of Phase 2. If not, there won't be any tariff relief. So has nothing to do with the election or anything else.
But to get more perspective on this story, we have Selena Wang of Bloomberg News, who has more details on this.
Well, now it looks like those tariffs on some $360 billion worth of imports from China are going to remain in place for at least 10 months. And our sources say that there's actually a tacit understanding between the U.S. and China that the U.S. will review progress and potentially consider removing some of those tariffs after the presidential election. So this is really the Trump administration's way of trying to ensure enforceability of this agreement. And it also allows Trump to go on the campaign trail for the 2020 election, saying that he's staying tough on China, and he also has struck a deal. Now, at the same time, however, there is a risk here since these tariffs are going to continue to be a drag on the U.S. economy, on the global economy headed into these elections. But what this news really highlights is that this is really more of a temporary trade truce than any sort of agreement. You have an agreement to not further escalate things, some currency commitments, intellectual property commitments, commitments to buy more agricultural purchases from the United States. But really, this leaves open the question of when we're going to see the removal of this massive amount of tariffs, and there have been no discussions on the more substantive issues like China's industrial policies.
Tell us a bit more about the industrial subsidies. What pressure have we seen on China in terms of that, and what has China's response been so far?
Well, the big question thus far is when and how are the bilateral negotiations between the U.S. and China going to touch on those thorny issues of industrial subsidies. But meantime, we are seeing some progress on a multilateral front. You have the U.S., China, and European Union striking a deal to expand the types of subsidies that are prohibited by the World Trade Organization. Now, if this is actually enacted, it could potentially be the biggest upgrade of the global trading rulebook for more than a decade. And you have the EU Commissioner Phil Hogan saying that this really starts to address some of the fundamental issues distorting the global trading order. In terms of China's response, it's been positive so far to the status of the negotiations, with the China Daily saying that the two sides should continue this peaceful coexistence.
On to Australia, where the bushfires have damaged areas almost twice the total area of Switzerland, and these fires have also been the costliest in decades, with insurance claims constantly on the rise. Ed Johnson of Bloomberg News talks about the implications of this.
The insurance claims actually rose to about 1.34 billion Australian dollars late yesterday. So as you say, they are rising. The good news is we're expecting some rain later on this week. Not so great for my camping holiday, but I can live with that. It's been so long since it's rained in New South Wales state that actually the Rural Fire Service put out a tweet this morning with a photograph of an umbrella and some windscreen wipers on a car saying, remember these, you might need them soon. It is actually great news. It will help the authorities get on top of these fires, and we're starting to see an impact with the cooler weather coming through. We've gone from about 130 fires in New South Wales state at the start of this week down to just over 100. But with summer in full swing now, we've still got a long way to go to get them completely under control.
And in terms of the smoke pollution and the haze, we've seen those, pictures of the iconic Harbour Bridge and the Opera House. You can't even see it. Now it's moved to Melbourne, which is really known, particularly at this time of year, as being, an events state, right? We're seeing this play into the Australian Open and wreak havoc there.
Yeah, that's right. The only Grand Slam tennis event in Asia, and it's feeling the impact of these devastating bushfires and the smoke that's blowing into the state capital, Melbourne. One of the players yesterday was forced to temporarily postpone one of her games because of a choking fit because of the smoke. They've delayed practice till after 11 o'clock this morning, and they won't play until 1 o'clock. But there are real concerns that if this poor air quality, this hazardous air quality continues, what impact it's going to have as the event gets underway on Monday. And really, it's just the latest in the sort of economic and reputational hit to Australia as images of these devastating fires and the poor air quality, the scorched wildlife, etc., get beamed around the world.
And now let's see what's making headlines across the globe. We have Sue Keenan of Bloomberg News bring us the first word headlines.
We're going to start with pro and anti-government demonstrators, which faced off in central Tehran over the shooting down of that passenger jet last week. All 176 people on board the Ukrainian plane died when it was hit by 2 missiles fired by the Revolutionary Guard. Iran initially blamed technical issues for the crash, and President Rouhani is calling for a special court to investigate the disaster, saying the entire world is watching. In the U.S., the Senate is moving closer to a rebuke of President Trump over Iran, with Democrat Tim Kaine saying he has enough Republican votes to pass a bill limiting the president's ability to launch an attack without congressional approval. The news reflects bipartisan dissatisfaction over the administration's varying justifications for the drone strike that killed General Qasem Soleimani in Baghdad. Meanwhile, there are renewed fears that the Taal volcano in the Philippines is about to explode. 40,000 people are being moved from nearby towns, with police imposing a lockdown to prevent any return home. 3 days of increasingly violent seismic activity have closed schools and offices, caused a brief halt at Manila Airport, and suspended trading on the Philippine Stock Exchange. Reports from Washington say the U.S. is drafting a rule to block tech sales to Huawei. The Reuters report offers no other details, and the U.K. looks set to rebuff American pressure by potentially allowing Huawei Technologies a role in its 5G broadband networks. Prime Minister Boris Johnson told the BBC that Britain deserves the best possible system, and that if one brand is rejected, a top-class alternative must be offered. Global news 24 hours a day, on air and on Quick Take by Bloomberg, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
Well, from there on, let's take a look at how the trade setup has been for today based on what we saw yesterday. We have Darshan Mehta, who's joining us to give us an update on the same. Darshan, what are the updates here?
Yeah, so over the past few days, it's been a good run as far as our markets are concerned. Today also no concerns. While US and Asia continue to be slightly muted, the SGX Nifty indicates a downtick of just 15 points, and with 2 hours to go, anything can change. So the traction certainly is not on the negative side, so a little bit of profit booking is all you can say what's happening. But yesterday we ended up pretty decent as far as our markets are concerned. The Nifty was up 30 points, but more traction coming in on the broader market. The mid cap and small cap end of the market has been rallying, and on an average the small cap index has been gaining close to 1% every day for the past 6-7 days. The Nifty Bank and the Nifty PSU Bank was slightly weak. The Nifty Bank was down almost 100 points, so there was selling in the banks but made up by buying on the Nifty side. Well, how did the ADRs pan out in trade? Vedanta was up 0.8%. Yesterday metals managed to do well. Tata Motors did well even in here. That was up almost 0.2%, but apart from it, the other two were muted in trade. Dr. Reddy's managed to move up almost 0.7%. So that's the traction on the ADR side of the market. Both FIs and DIs were net sellers in the cash market yesterday. Now, how did our markets pan out and which were the contributors? Obviously, that was HDFC, ITC and Axis Bank were the ones that managed to contribute. IndusInd Bank was down significantly in trade post the numbers. So that and Reliance and Kotak Bank aided the Nifty come down. So majority of the negative news coming in there. As far as the F&O market was concerned, let's see what exactly happened. Returns of open interest built up of 2%, indicating a bit of fresh buying that was seen on the Nifty. The Nifty Bank was down in trade yesterday, and that was on account of long unwinding. Open interest was down almost 3% for the Nifty Bank. How did our market pan out? So again, you're seeing that put writers are active from 12,100 right up to levels of 12,300. and there is where a little bit of resistance. We spoke yesterday also that at 12,400 there will be resistance that will be seen on the market, and that is being seen, but nevertheless the put writers are much more active. In trade also yesterday, put writers were much more active at the 12,300, not so much at the 12,400 mark. In terms of how the VIX and the PCR managed to pan out, the Nifty was doing well, so the VIX not too much of a move coming in, down almost 3%. The PCR also managed to move up because the put writers were much more aggressive than the call writers yesterday. Now in terms of which were the stocks in focus, NTPC open interest build up of 40% on the long side. Tata Global open interest build up of 40% on the long side was one of the biggest gainers in trade. Mindtree reacted ahead of the numbers, and decent numbers probably could react in trade today, and Wipro had fresh buying ahead of the numbers, so that probably will react today. So these were the open interest gainers. In terms of companies which dropped on open interest build up, there was short covering that was seen in GAIL, NMDC as well as Britannia, and long unwinding which was seen in Torrent Power.
Right, Darshan, thanks for getting us those updates on the cues that we can take forward to as we move into trading session today. But there will also be a bunch of stocks which will be in focus on the back of news, and we have Samit Sarkar who's joining us to give us that list. Samit, good morning.
Good morning, Agam. I'll start off with the earnings first. Mindtree, the revenues were in line, but the operational performance was very strong by Mindtree. The margin rate was due to lower salary cost, while the net profit beat was due to higher margins and lower taxes in the third quarter. The revenue growth for the company was led by top customers, and if you see segment-wise, it was aided by high-tech and media verticals. Now, the TCV deal wins were soft during the quarter due to furlough season and delayed decision-making by key clients. However, the company remains confident of margin expansion over the next few quarters. Tata Steel, BSL, that is Bhushan Steel, now the revenues were up 3%, but the net loss widened to 501 crore rupees. The EBITDA was down nearly 72%, while margins came in lower at 5.5%. Now, the margin drop was on account of higher raw material cost for the company. In other stocks to watch, firstly, Bharti Airtel, because they have approved and finalized the bidders for the $2 billion QIP. Now, the issue price is fixed at around 445 rupees, which is a discount of 5% to yesterday's closing. Along with this, the company has also approved the allotment of foreign currency convertible bonds, which will be due for conversion in 2025. Now, the bonds will be converted into equity shares at a price of 534 rupees, which is at a premium of 14% to yesterday's closing. Canara Bank, because they have called off the divestment process of its entire stake in Canfin Homes. Now, the Canara Bank has a 30% stake in Canfin Homes currently. Yes Bank, because they are seeking shareholders nod for increasing the authorized share capital from 800 crore rupees to 1100 crore rupees. Now, the authorized capital raising on Feb 7th via issue of equity shares or convertible securities. And the bank has also acquired nearly 30% stake in Reliance Power's Rosa Power via invocation of pledge shares. CSB Bank, because they are saying that the regulatory restriction imposed by RBI on opening of new branches has currently been lifted, so that stock will remain in focus. Along with that, National Peroxide, because the Kalyan plant expansion is expected to be commissioned around the last week of January. That's what the company said. Lemon Tree, because they have opened a 65-room hotel in Rishikesh under the brand name Lemon Tree Primal. Now, the hotel shall be managed by the Carnation Hotels Private Limited, which is again a subsidiary of the company. And lastly, Godavari Power and Ispat, because the tribunal has dismissed a claim of nearly 94 crore rupees made by Lauren Jyoti, an EPC contractor, against the company's arm. So that's a positive development coming in for the company.
All right, Samit, thank you so much for getting us those updates. But moving on to another important earnings. Well, Wipro's third quarter results met analyst estimates, and the company's IT services margins saw a rebound after 3 quarters of degrowth. The company has now guided for a 0 to 2% sequential growth for the fourth quarter. I had a chance to speak with the company's CFO, Jatin Dalal, and here's a slice of that conversation.
As you know, we delivered at midpoint of our guidance in quarter 3, and we are guided for 0 to 2% for quarter 4. And that is really backed up by a fairly good order booking that we saw in quarter 3. Trajectory wise, we improved the trajectory of our order booking. And we also have a fairly healthy deals pipeline, which gives us confidence around the guidance for quarter 4 that we are given.
Jatin, in the press conference, Abid spoke about the fact that almost all of your clients, pardon me, are choosing Wipro for business transformation, which means that there are already deals which are signed in. There is a possibility of many more to come through. My question is that when digital revenues or the digital initiatives are growing at around 28%, they now comprise as much as 40% of your revenues. There is always that concern with respect to the banking financial vertical, which is, of course, the largest, not only for you all, but also for the industry as a whole. What kind of conversations are you having right now with the clients, and what is the indication for the outlook going forward, not necessarily for the fourth quarter, but even for a few quarters thereafter?
BFSI is one of the largest business units for us as well as for the industry. There is certain amount of pressure on spending, competitiveness around price, which is more pronounced now than it was 4 quarters back. I believe BFSI as a sector has always remained the most sensitive to the macro environment, overall growth patterns, markets movements. And this year, while overall outlook on macro remains fairly stable, I would believe that we should weigh in and really see how this sector is responding every quarter. It's not going to be a year where you can say in the beginning of the year that this year is going to be X outlook or Y outlook about BFSI. I think this year is something that one would want to watch every quarter, where the sector is and what should be our priorities vis-a-vis the demands of our customer.
And moving on, Aditya, Birla Sunlife AMC expects the broader markets to outperform benchmark indices in 2020. Yash Upadhyay spoke to Balasubramaniam and Mahesh Patil and began by asking them about the prevailing polarization in the markets.
If you look at analyze the reasons which cause this polarization in the market, we think some of these factors are normalizing. And given the sharp underperformance of the broader market vis-a-vis some of the top 10 names, there is room to believe that we should see normalization of that trade slowly playing out. Again, it all depends on how the domestic economy plays out, because a lot of these sectors and companies which are there in the broader market are linked to the domestic economy. So if our view is that domestic growth has bottomed out and we should see improvement, I think we should see that spreading out across companies. Having said that, it will be a very slow and gradual recovery, and while the market will start to get broader, it will be very selective, both in the large cap space and in the mid cap space. We don't see across the board recovery, but clearly the polarization in the market will start to kind of normalize, and we see a broader movement in the market catch up in this calendar year.
All right. Sir, coming back to you, last year we had this expectation that the economy will soon start to move ahead from the shocks of P-Mon, GST, RERA, but then the NBFC liquidity crisis happened, and then because of that, again, the growth story was pegged behind by at least another 12 months or so. In 2020, while mostly everything is looking positive as of now, and there's expectation of the economy bottoming out and growing forward, what do you believe would be the joker in the pack, or something that would come in the way of this growth story in 2020?
I think this time around, domestic related issues would get largely addressed. I think what you described last year was NBFC's crisis that happened. I think we'll probably see stability coming back both in the NBFC's market as well as the banking sectors, and the rates getting stabilized, therefore the credit cycle also could come back. I think what could potentially see that what you have seen in the recently the escalation, especially around Iran and US, and maybe it's a new thing which could come. Last year was driven by China-US trade war. Now, while that is seeing some kind of arrangement that is now falling in place, the I think outcome on some of the recent attack probably we'll have to just see. And second, of course, what's an outcome was Mahesh mentioned in the presentation about how the US election outcome is going to play out.
Absolutely.
These are some of the things one doesn't know actually how it will play. Of course, we have still some time away for that.
Now, there's lots to talk about over the course of the day, and you will find all the live market action on BloombergQuint, but there are also a few stories that you should consider reading on our website, BloombergQuint.com. Here they are. The Bombay High Court refused to give interim relief to television broadcasters against the Telecom Regulatory Authority of India's orders dated January 1st. That had reduced pricing for pay channels and capped the number of pay channels bouquets that could be offered by broadcasters. As many as 8 major broadcasting companies had moved court seeking a stay or deferral of the Jan 15th deadline for communicating revised channel pricing to consumers. And the tensions between nationalism and globalization will probably be the most defining trend of the new decade. That's the word coming in from Kumar Mangalam Birla, who said this on his personal LinkedIn post. He also wrote that globalization will now make way more slowbalization, and that will be the new emerging trend. And on that note, it's a wrap on this edition of All You Need to Know, but stay tuned to BloombergQuint for more news and updates.